One of the objectives of the new regime is to have reporting requirements which are more proportionate to the size of the entities, and hopefully it will be medium-sized entities and some small companies which will benefit most from this change. The new UK GAAP is much simpler than what we have at the moment. So one of the first things that companies need to do is to think where they fit into that new regime. A lot of small companies currently use the FRS, or the Financial Reporting Standard, for smaller entities. Now, the good news for those small companies is that nothing is changing at the moment. So the FRS is still available for small companies in the new regime. However, in the longer term, things may well change. There are some European directives which will come into force fairly soon, and that will provide new options and new alternatives for the smaller companies.
The straight answer is that there will be significant choices which SMEs will have to make. If we take it in turn, a medium-sized entity will probably be using the current UK GAAP, and they will need to transition to the new FRS102 by 2015 at the latest. They would have the option of going to full international standards if they wish to do that, but I wouldn't expect that many would take that route. Small companies have an additional choice in that in the past they could have chosen to adopt the financial reporting standard for small entities, the so-called FRS. That's going to stay in place. And if they've adopted the FRS, then they will continue to use the FRS, and for the moment there won't be any change. However, because of changes going on in Brussels, there will be some further simplification that's necessary to the FRS, and that's going to come through in the next couple of years. So watch this space for that one. There is a new type of entity that is being developed. Again, this is coming out of Brussels, called a micro entity. Generally, if you're up to about 10 employees and about £500,000 of revenue, you would be a micro entity. And there are new proposals coming through so that they will be taken out of having to file audited accounts altogether. So for them, there will ultimately be a relaxation completely.
The FRS102 will impact all companies to a certain extent, because we are effectively replacing one set of rules with a new set of rules, and so therefore companies are going to have to get to grips with what the new rules say. That said, depending on the complexity of your business model, the end result and impact on your financial statements may not be that much. Those companies which enter into slightly more complicated arrangements may, for instance, find they have new rules to consider, particularly around financial instruments, that will have a significant impact on their financial statements. That said, within the bounds of FRS 102, there is certainly less detailed guidance perhaps than what we're used to, and that perhaps presents an opportunity for companies to interpret the accounting rules in slightly different ways to perhaps best reflect their business model.
So the new reporting standard FRS 102 is the most fundamental change to accounting standards in a generation, and I think up till now many SMEs have looked to their accountant to deal with these things, and they've imagined that their accountants are going to be attending training courses, are going to be up to date, and they can leave it to their accountants to deal with. I think in these circumstances there is an opportunity to get involved in some planning, improving the way things have been dealt with, and to have a think about how they might want to get these changes to impact on their business. Because the truth is that this is a very fundamental change. There are choices, and it will have an impact on companies' balance sheets and their profit and loss accounts.
In the short term, there will be a period of transition as you move from one set of requirements to another. FRS 102 is based on the IFRS for SMEs, that's the International Financial Reporting Standard for small and medium-sized entities. So the requirements in FRS 2 might be quite different to the ones that you are following today. So for example, if you've got something like forward foreign exchange contracts or interest rate swaps, they'll be appearing on the balance sheet for the first time. Things like lease incentives, investment properties are also accounted for quite differently, and there are many more. We are already seeing companies at the moment who are asking us questions on how particular transactions will be interpreted when it comes to FRS 102. And you can see that in certain cases
more than one answer may be appropriate. And so therefore, I suppose with the cost of, one of the costs may be that we will perhaps see a slight reduction in comparability between financial statements as different companies interpret the rules slightly differently.